Good morning, Jax. This is Fahad. Today is Friday, January 8th. Let's get started. So today I just like to provide an update on two positions that we recommended recently to JAG clients. The first one is Teladoc, symbol TDOC. There were a lot of happy clients in the chat room yesterday, a lot of questions on this one because this one had one remarkable pop yesterday. You can see this power candle is stocked slightly gapped higher and then just ran all day long yesterday. You can just see on a 5-minute chart yesterday. So it's a nice pop, gapped higher slightly, and then all day long it just continued to run. And basically what that means is that we got the very nice technical breakout that we had been anticipating in this stock. And so here that is. Beautiful candle on very high volume, MACD powered higher, RSI lifted sharply higher from 52 to 68. And I think this has significant more upside ahead. And eventually I expect a lot of momentum bulls are going to start chasing this name. Now, here's another technical look in this one. So you can see on from stockcharts.com. And this is basically clearing all these VOP congestion levels that we have in place. Once this thing get through about $235 per share, then I think there's nothing that's going to stop it going all the way to new 52-week high, which is 250 plus, and that has been my target on this stock. And for those who do not know, here is the actual bull case that was presented in webinar very recently. And so that's how we are positioned into this name. If you go to the Jaguar website, you'll see that on December 17, right over here, is when we discussed Teladoc recommending to buy call options. These call options, April 210 strike call options that were going for 1850. They closed yesterday. Let's see, Thinkorswim, if it's working on time. So these closed yesterday right here at $35, $36 per contract, so essentially doubling. Now, I brought all of this up because there was an interesting update from an analyst also yesterday, which we did not get time to catch up. And this comes from, let me see, this comes from, let me close this. Here we go. This comes from the analyst, which is, I forgot the name. This is BTIG analyst in their initiation note, essentially. Now, they point out something very interesting. They had this management meeting, and so some of this coverage is basically based off the discussions that they had. But there is this opportunity with the government health employees that is significant, that is potentially not baked into the consensus view. And I wonder if this is the missing piece that could potentially recharge the bulls there, because one of the concerns why the stock had been lackluster up until yesterday has been that the growth rate in the telehealth services, which were boosted sharply during the COVID-led shutdown, will decelerate from here, from what was 90% year over year to potentially 35, 40% year over year. First of all, on that thing alone about deceleration, I really believe that this company doesn't need to actually maintain a very high growth rate for the stock to continue to outperform. I think the valuation reset is already behind us. And I also believe that if they can maintain 30 to 40% growth rate going forward from here, that would be sufficient for the stock to gradually continue to march higher. The game of expectations, essentially, when I look at street estimates, tells me that there's not a lot of very high expectations from this stock to beat and materially raise all the time. Now, in this note, they talk about that currently the GEHA program, or FEP, which is Federal Employee Program, only 400 and only right now only 200,000 of lives on the diabetes alone, and overall 440,000 of the employees are actually currently on this program. But this is estimated to rise to as high as 8 million for the entire federal employee program as they continue to expand into this direction. Now, not all of this will go in the favor of Teladoc, because there are other players, telehealth services provider as well. But when you do the math around it, they conclude that given the synergies that are now in place between Teladoc and Livongo merger, if we assume that the starting point of 440,000 lives on the Livongo platform and 10 to 20% of the 10 million lives from the GEHA and FEE programs combined as potential wins, they conclude this potentially implies a significant growth potential for Livongo and Teladoc in 2021 and beyond. This is one of those kind of topics that is not fully baked into consensus view, because consensus was looking at 90% growth last year, and they have reset that bar of expectations down to 30%. And then if you look at for the rest of 2021 and even 2022, that's where they mostly expect. So if you're looking for an angle of a surprise when this company reports earnings next time, you want to keep an eye on what they will say about continued traction into the government health program, because this is a significant opportunity for this company. I expect this stock to go all the way to 250 to 260 as this breakout continues, and we should do quite well in the call options that we recommended in webinar 2 weeks ago. Secondly, a quick discussion on one of my other stocks that I had discussed previously, which is right here, the bull case that was presented, a contrarian bull case that was presented in Ciena. That's why I pulled this picture when I posted this conversations. This was on December 4th. And subsequently, this stock absolutely ripped higher, as many of the JAG clients know, because they were positioned into this one. So December 4th was right over here, when the stock was trading at around $45 per share. And subsequently, the stock continued to march higher, and it got to the target that I had highlighted. That's where the VOP pocket was, the volume pocket, all the way up to 53. And that's precisely where the stock reached and paused. And it has been consolidating for the past 2 weeks right in that area. I believe that now it's about to take out this resistance again with this new leg higher that is beginning. And I think that now this will rise all the way up to $58 to $60 per share in a steady move forward from here. Another way of looking at it is to simply draw it in stock charts. And you can see right over here, do take a look at the 4-month patterns, and you will see what I'm talking about. So this is a potential resolve of a bull flag that we're about to see after a modest pullback, and I would expect further upside in the stock that carries this name all the way to the high 50s. Now, the reason why I like this name is because this too had an interesting update from one of the analysts. In this particular case, this comes from Stifel, and that was yesterday morning. Here's the actual note from Stifel. Now, in this note, they met with the management, the president and the CEO, Gary Smith, as well as the head of the internal relations and investors relations department, Greg Lampf. And they came back with a significant update, and they basically conclude over here that there's significant opportunity that remains in the 800G and software to drive longer term growth. And management pointed out specifically, which is summarized over here, we believe that once the economic recovery is underway, which is currently the case right now, we should see more active telco buildouts with more robust equipment demand, likely beginning in the second half of 2021 and supported by several contract awards that have yet to contribute to revenues. And this is a very, very important point right here, this key line. In fact, they tried to quantify this, that the European market alone, the growth opportunity there could be so substantial that it could account for as much as $500 million up to $1 billion in total new growth revenues. But it will take some time to deploy, as they are tied to significant infrastructure upgrades and Huawei displacements. This is the key that I've been highlighting ever since I posted that video on Jaguar Media back on December 4th. The simple reason is that this too is the case where the consensus, in my view, is completely misplaced. You look at the earnings report, you look at how many analysts have downgraded this stock previously. Many have gone to the sidelines, and yet what I see from my perspective with the budgets and the capex rising is that the WaveLogic 5 Extreme optical network is getting more and more traction. And this is direct discussion from the CEO and the management just yesterday is clear example of that. None of this is baked into consensus view. I always say this all the time whenever somebody asks the question, one of my JAG clients, that the best growth opportunities or the best alpha is generated in the market when you find the biggest disconnects between what the street is expecting versus what the management is telling us. This is one of those cases, once again, where the management is painting a very robust growth picture, yet the street hasn't caught up yet. In fact, when this report came out on December 10th, this earnings report, immediately after that, you still had analysts reiterating sell rating and underperform rating on this stock, and yet it continued to march higher. So expect this stock to break out again and generate more alpha for the long holders, and I expect the stock to gradually climb to $60 per share. That's it from me, Jay.
Morning, everyone. So just a few items. Number one, quick update on Generac, ticker GNRC. The last time we covered this was actually on December 22nd in Conversations. And there, once again, that was a quick update as well, where there was a recent Wall Street Journal report essentially highlighting senior living patients, nursing home patients moving away from that environment and into the home setting, where their kids could take care of them. And B of A had a note essentially speculating that this could be a revenue boost for generators essentially, and then Generac. And there wasn't any substantial evidence, any data yet, but it was outside the box thinking. But today, B of A has another note on the company. They highlight a number of things. They raised their EPS estimates, but the one item that caught my attention was an upcoming catalyst. If I look back at an article from AGL Media, which covers telecom, the telecom industry, back in late October, they said a bill has been signed into law by California Governor Gavin Newsom that creates an expedited process for the installation of low emission emergency standby generators to provide backup power for cell tower sites throughout California during a public safety power shutoff, electrical power outage, or a catastrophic emergency. The article then goes on to state other states are bound to look at the California law and consider passing similar legislation because of a desire to keep networks running during natural disasters. B of A basically says, first of all, this is expected to be implemented from 2021 to 2023, and right now is being pegged as a $100 to $200 million revenue opportunity for Generac. So now we have an actual catalyst to keep in mind, and one that I don't think is baked into any estimates yet.
Great stuff. This is, by the way, just to remind everybody, 3 times previously we have covered the bull case for Generac in Jaguar Media. A simple search function on Jaguar Media will give you the hits that, on June 25th, on September 15, on December 22nd, and today, yet once again. And here's how the chart has performed throughout this time as it just continues to break out and continues to march higher. I think this particular piece about nursing homes and how this company could potentially benefit, and now we can quantify some of those numbers related to what's happening in California. This thing is going to move the needle. Because that's, as you said, is not in consensus view, because that's exactly how I read it too, because I've been following this company just like you, Jay, for several months now very closely. I have never come across anybody talk about how this company benefits from nursing homes.
Right.
So that's why I listed this in my summary at that time too, on December 22nd, when we covered this, that some out of box thinking here, because I don't think this is baked into consensus view at all. So there you go, another element of surprise, and stock is deservedly breaking out, and I think this will continue too. So Thank you.
And then very quickly, looking ahead to weekend research, some of the items I might be considering. Number one, Monster Beverage. This is my go-to consumer stock. Anyway, the company is going to be hosting an investor meeting next week on Thursday after the close. And there have been some recent channel checks that have come out that I will share over the weekend. And then lastly, I'm debating on whether or not to talk about the animal health industry with multiple stocks covered, or just focus on individual stocks. IDEX Labs, for example, there's a very interesting piece from Stifel where they talk about seasonality. Essentially, you want to own IDEX Labs basically through August, based on the performance it has had over the past 5-6 years against the S&P 500. And then there's also this ProCite One opportunity the company has. And then switching to an animal health name we really have never covered in great detail, and that's Covetrus. Ticker is CVET. This company was spun off in 2019 from Henry Schein, and when it came public, the chart, it's just dreadful. Just all the way down. I think it from 32 to I think single digits. But clearly they've done something, and I think it started with a supply chain issue based on the commentary that I've read. So like I said, I don't know if I'm going to cover multiple names within the animal health space or just focus on some individual names, but look out for that this weekend.
Sounds good. And one thing I will just point out is that previously, when I have covered my favorite in the animal health space, which is IDXX, IDEX Laboratories, those channel checks, particularly the ones that come out from Credit Suisse about animal health tracker, they tend to be pretty much right on the money. So I don't know what their source is or how they collect the data. Directly from vets and all that, but they always tend to result in exactly what we would expect in the earnings report. So if you have checks on this one, and if you end up covering this in the weekend research, I'm looking forward to what you come up with.
Yep.
All right, good stuff. Chronicle.
Morning. I'm going to do a rapid fire update of 3 different positions I recently talked about.
Yeah.
First one is New Market, symbol NEU, which was a bearish idea I presented on December 22nd. So I got stopped out of this trade on Wednesday, so I've taken a loss on this one. Still bearish on this company because there's no growth and the stock has pretty much become an annuity over the last several years. But I think it's best to step aside for now because we're currently in an environment where a rising tide is lifting every industrial stock regardless of bottom-up fundamentals. Technically speaking, RSI is showing overbought and stock is at resistance currently. So if anyone's still short, I would just use any pullbacks as an opportunity to cut the loss. But going forward, this is one I'm going to continue watching. And if I get another attractive setup, I'll take the tactical short again, but not right now, given that the bullish sentiment around industrials because of the anticipated stimulus from the Democrats taking the Senate. So stepping aside and taking the loss on New Market.
Sorry, I had the wrong symbol. I was looking at Nucor, which is NUE. The one that you're talking about is New Market, which is NEU. So that's the one. Okay, good for thanks for the update. And by the way, I already mentioned this in the chat from a couple of days ago to Jack Clients. When I had asked whether we are still bearish on this one, and I said nope, move to the sidelines because the chart technically was starting to break out. So, and the next one.
Next one is Meritage Homes, symbol MTH, which I discussed on December 23rd. I got a question about this one. Now, fundamentally, what's been happening over the last several weeks is that the market is concerned about rates going higher. But if we look at mortgage rates, for example, the 30-year fixed rate mortgage, that's continuing to go lower. So I think these recent concerns are overblown, and that's on top of the rest of the bull case and macro data that I presented on December 23rd. So if we remember back then, I said that I was entering a half size long position, and what I was hoping for was for the stock to continue falling towards $80 so that I could buy the other half and lower my average entry. That's exactly what I got a couple days ago on Tuesday. So I'm now long with a full position, and I'm actually slightly in the positive now following yesterday's rally. One thing I was taught was that it's good to stick to the original plan once you've committed to the trade. So rather than letting episodic price action rattle and shake us out. So for this one, Meritage Homes, no change to the plan. And I now have a full position with average entry of just under 83, hard stop at 76 and targeting at least 110.
Sounds good. So thanks for that update. So just a reminder, on December 23rd is when the bull case was presented for MTH right over here in conversation. So one can go and watch that. So you're adding to the position on the weakness and looking for continued recovery from here. There was a nice reversal candle yesterday, I have to say, and the RSI lifted higher sharply, and the volume is also now coming back. So technically, this picture will start to look pretty good once it makes its way all the way to 90 and it starts to break out. Also on the downside, there is heavy support right around $72 per share, so that should also continue to be in play. The only concern that I will have about this one is you know, the year-over-year comparisons and how they will be read by the market. As you may remember, Chronicle, a couple of days ago, when Jay pointed out in one of the discussions that we had in conversations, where we were looking at Home Depot and Lowe's year-over-year comps, and what used to be 20-25% year-over-year comps or high teens in 2020 because they benefited from COVID, you know, basically are now being seen as 3% growth only for HD and a negative growth for Lowe's. And I wonder if that has a similar kind of a sentiment that will filter through for the home builders as well as the report earnings for Q1 and then guide, or sorry, Q4 and then guide for Q1 and then beyond. That's my only concern. The year-over-year comps are going to be tough for this group, but otherwise, aside from that, I think I agree with you that the technically is presenting a buying opportunity. And the next one?
Last one is One Life Healthcare, symbol ONEM, which was discussed on December 17th. So yesterday, Canaccord was out with a note maintaining a buy rating and upping their price target to $50. Their qualitative rationale is that they are now seeing believers in technology integrated consumer healthcare, with both consumers and employers demanding digital tools to be tightly integrated with traditional care delivery. And then on the provider front, we have real-time data and analytics, which are likely to be the focal points exiting the pandemic. Additionally, with respect to traditional services, Canaccord is fully anticipating that the shift to less costly outpatient and home platforms to continue to benefit at the expense of the more costly and traditional health system and hospital enterprise. And then separately, as shown by today's first read, Piper Sandler raised their price target to $51 from $44 while maintaining overweight. According to the note, their proprietary channel checks showed 38,500 One Medical app downloads in Q4 versus guidance of 24,000 member ads at the midpoint. So that's a blowout number. And regarding technicals, the stock is currently consolidating, and personally, I've trailed my stop into profitable territory. So this is kind of a free trade for me now. My entry was about $34, and I'm going to keep trailing the stop tactically to see how much this can make.
Excellent update. I love this name. This is a Jaguar top pick from what was it, second quarter outlook, I believe, of 2020. And then also we reiterated the bull case right over here. Third quarter outlook is Jaguar. Third quarter outlook is what made the top pick. And so we reiterated the bull case on this one recently in conversations on December 17. I believe this has substantial upside. So, you know, my view on this one, that don't cut yourself too easily on this one, even if it pulls back a little bit, because I think that your downside could be within 10% if the broader market pulls back. But I think the upside from here in this stock is still substantial. And you know, a lot of the times when things get overbought, like they did over here with RSI, once again over here, they tend to quickly pull back. But then oftentimes, and this is purely just my technical read on this one, oftentimes when the trends are very improving, fundamental trend that is, and you see the stock rise to the levels previous highs, and then once again RSI and MACDs get overbought. If they're not pulling back immediately with almost like an inverted V-shaped decline, and they're forming a tight bull flag, that's telling you the stock is in a strong hands. And the accumulations, the institutional accumulation that we have seen in the stock will continue and stay with it for a while. So I think we're going to see a breakout from this. Downside is limited. The upside could still be substantial, which will take the stock to well into 50s, and is currently at $42 and change. So All right, great stuff. Thanks for all of this updates. So today pretty much ends up being a day in conversations where we brought a lot of stocks, but basically the ones we have covered already with quick updates on so many of these names. So hopefully this was helpful. We'll see you in the chat room shortly.